Now I want to talk about renewable energy, and that is arguably the third major disruptor of global trading architecture. Research conducted by Asia House last year, we showed there's a clear shift in Middle East trade away from its traditional partners in the OECD towards Asia. Western markets still account for the majority of trade, but the annual rate of growth between Asia and the Middle East was significantly higher than with established markets. There's a very clear trend there. And energy, of course, one of the key factors driving Middle East pivot to Asia. Asia's remarkable growth in recent decades has been fueled by oil from the Middle East. China alone accounts for the majority of Saudi Arabia's oil exports. And the UAE has done a raft of high-level deals with Delhi as it looks to shore up its energy security. So there's a lot happening in that space. But with Asia and China in particular moving further into renewable energy, and also the need for Middle East economies to diversify, they're also moving more towards sustainable forms of energy. We've seen it in many of the strategic plans, including initiatives such as Saudi Vision 2030 and UAE Vision 2021. So we're going to unpack some of those issues now. I'm joined by Michelle Davies, Head of Clean Energy and Sustainability at Eversheds Sutherland. Hongbin Cong, former Vice Chairman, International Relations at Falcon and Associates, a strategic advisor to the Dubai leadership. Laurent, CEO of SirajPower, and Daniel Calderon, founder and CEO of Alcazar Energy. Please join me in thanking them for being here. Michelle, I want to start to you. The transition from hydrocarbon fuels to renewables. Where are we in a global scale right now? What's the global picture look like?
Well, it's happening, Michael.
Yeah.
The energy transition involves a number of different things. It involves the shift to renewables, but renewables is only, I shouldn't say only, it's an intermittent technology. It tends to generate, unless it's biomass or something else, when the wind is blowing or the sun is irradiating. And so the energy transition also includes a shift towards battery technology to provide the backup power and drive greater efficiencies from the renewable energy itself. It involves the move towards electric vehicles. It involves a move to, and Laurent I know will have more to say about this, but towards distributed systems rather than relying on centralized grid infrastructure. So there is a huge shift. Some countries are embracing it more than others. Certain parts of the Middle East certainly are. And I think it's fair to say that in Asia there has been a huge uptake. So China still has a way to go, but China has made significant progress. India has made significant progress. And then if you look at Southeast Asia, those countries are all ramping up systems now to generate renewables. But in my experience, and I've been in this sector for 1 year shy of 20 years, what you tend to find wherever you are in the world, save in certain particular markets like Europe, where the European Union came together to create a target that had to be met by 2020, save in particular circumstances like that, you will tend to find that renewables only really happens when there is some kind of other economic driver for it. If you look at China, why is there such a big shift now? It's not necessarily, part of it is economic, but part of it is also political because of the pollution. Yeah. So there will always be some other reason, which causes social unrest. There will always be some other reason, but it's happening. The train has left the station. It's not going to stop. And it is furthered by the fact that, or advanced by the fact that capital, most big sources of capital now, are being required to invest in renewable energy and in businesses that are themselves sustainable and are utilizing renewable energy power. So
there's commercial but also political and social pressure to do so. Hongbin, Michelle talked there about the some Middle East countries doing quite well in terms of renewable. What's your take on that?
In the last couple of years, we have seen a very rapid development of renewable, but mainly the solar, the energy in this region. Actually, it made the world a number of surprises. If the people familiar with the development in this area, I still remember when the second phase of Mohammed bin Rashid solar park announced the bid, the electricity price by the 200 megawatts solar, the PV solar power plant was 5.6 or 5.7 US cents per kilowatt hour. That's really shocked the whole world because that's very close to the conventional, the cost of conventional power, which is coal, generated by coal, using the coal. And then we got even a big shock when the announcement came in for the third phase, is 800 megawatts PV, the photovoltaic solar energy. That was 2.99 US cents per kilowatt an hour. And then we saw lots of questions, suspicions around whether this 2.99 is real. Then the Saudi, and the Saudi recently launched the solar project is 300 megawatts. The bid price, I saw the different figures, but it's definitely around the 2.34 cents US cents per kilowatt hour. And there was a very interesting, there was the study done jointly by Norwegian Research Institute and the one entity from this region, I couldn't remember, and try to explain whether this bid price is real and is attainable and is sustainable. And the result, the conclusion of that research said it is real and it is attainable. And on the following accounts, there's a number of contributing factors. One is obviously the huge decrease the cost of a solar panel. That's actually driven by China's massive production capacity, as well as the very quick deployment of the panels around the world in the solar energy. That's the major contributing factor. And also, there's a number of, at least the two very unique factors in this region, or perhaps you can only find in this region. One is low tax regime, and the second one is the cheap labor. So when you install the massive solar farm, and you need a lot of labor, and the labor cost is in this region is still relatively lower. So in the short, I think the development of the solar energy in this region has set a very good example to the world and has encouraged the other countries to come after.
Laurent, you're at the heart of the solar industry in this part of the world. Like your view on pricing, but also where it fits in to the strategic goals of the countries in the region.
Yes, thank you. Yeah, I think we as you said, and what Michel highlighted, we have seen now for many years some large utility scale solar wind farms being developed in the countries. And yes, we have been shocked every time there was a tender, because every time it was much lower than the previous one, and probably much lower than what was expected. What we now see in UAE first, but it's coming to the rest of the region, is development in distributed generation. So distributed generation, basically, it's producing your own electricity from your roof or from your parking or from whatever piece of land you can dedicate to solar. And that's probably the next shock to come, because today in Dubai we are shocking people every day when proposing them to cut their electricity bill by 30-40% by installing solar on their roof instead of taking it from the grid. And this same shock is about to be spread over the region. And that's probably the second waves or the second waves of renewable energy development we'll see in the region, and it's probably going to be as massive as utility scale for the region that, as you said, solar is abundant in the region. It's relatively cheap to install some solar systems, and there are a lot of industrial areas or a lot of buildings which are fit for installing solar, and it will have a very different impact in terms of trade. Coming back to the trade compared to utility scales, utility scale projects. When you talk about a 1 gigawatt projects, for a year or 2 years, you will get 2,000 people working in the desert, importing massively some equipment and setting up the plant. And then for the rest of the life, the impact on the economy is more limited. When you talk about distributed solar, it's a completely different story. You are talking about smaller projects, and you don't build them all on the first day and live for 20 years waiting for the revenue to come. Every month, every week, every year, you build new systems, you operate them. It's a lot of O&M, and it's completely changing the way you did it. You cannot do it if you are a company from China, from India, or and coming from a project here. No, you need to be local. So it's a very local business.
Play very much.
It's a very local player, a local game, and you probably will see mostly regional champion growing on this market. And in terms of trade, it's a different story. You can't expect to do it from India, but you can expect to set up JVs with some Asiatic countries having technology and having the will to come here. So it's more in terms of JVs and how to locally manufacture, how to locally build in partnership with some local companies. So it will have, I believe, a different impact in terms of on the economy of the region, in the sense that it will help developing the local manufacturing, local construction sector, probably differently than what's happening with utility scale plants. Yeah.
Okay. Then is that what you're finding, that the interest in renewables here is helping the diversification plans, but in a perhaps different way than others? It's about joint ventures, it's about investments, it's about ramping up employment in a short period of time, and then enjoying the economic benefits of cheaper power.
Yeah, that's true. A lot of the money that we invest in these countries comes from multilateral institutions, some pension funds and some family offices, but many multilateral institutions. And what they like about our asset class is that it's one of the fastest ways to catalyze foreign direct investment into these economies. So maybe to give you an example, when we started the company 5 years ago, at the time we didn't really have a policy in Egypt to speak of, and at the time we didn't even have a first round of solar in Jordan. We took a view that at that point the cost of renewables was already lower than conventional power, and that as a result it was going to be needed. We issued a report for our investors at the time saying that by 2030 the MENA region was going to have about $500 billion of investment in renewable energy. You fast forward 5 years, and now Bloomberg has come out and said that not only we're halfway there, but now their estimate is that the MENA region will have $700 billion by 2030. Our organization has invested in the order of $1 billion in these projects. We're the largest renewable energy company in Jordan. That has been about $450 million of investment in Jordan. And that has lowered the cost of power. Mm-hmm. When we started in Jordan, the cost of power was at 28 cents. Today, the LCOE in Jordan is somewhere in the mid-teens. Substantially because of renewables, but we also have to say that they have increased their access to gas. They have gone away from some liquid fuels a little bit into gas. We are the second largest investor in Egypt in solar. And there, the difference between the price at which we sell power to the government and the levelized cost of electricity is 33%. So we're 33% below the levelized cost of electricity. So the other analysis that our investors like is we look at what is the value of all the gas that our plants displace during the life of the contracts. And that's about $1 billion. So if you take you sell the gas that our megawatt hours displace and you sell them in the international market, and you subtract from that all the revenue that our plants take, that shows that you're generating those countries over $1 billion in savings, which is great because it's not just $1 billion of foreign direct investment. It's not just we have created 4,200 jobs in the region, but it's also displacing gas, which is a big priority for those economies. When you take a step back and you look at the big picture, the Bloomberg released a report about, every year releases a report about what's happening to renewables. And Shell, actually, which is a conventional gas player, issued recently a Sky report, which aims to see, okay, what's going to happen in the world with renewables. And they both agree that by 2050, the world will be 85% renewable. That's an $11 trillion investment. And the reason it stops at 85% is because gas is more expensive, but you need to be able to address the peaks. Now, the region, the MENA region, is considered by them to be the third most attractive investment destination after China and India. And so it's just an area of the world that is not just attractive in the short term, where our money is making a difference from a people's quality of life perspective, but this is not an impact investment. It's also considered to be a profitable investment in the long term.
A long-term one, they're staggering numbers. Michelle, the financing of these projects, that's also an issue. In fact, there are lots of reasons why it might be easier to get finance. One being pressure from the political sphere or the social sphere to do more clean energy. Is that right? Are you finding that?
Well, I think the way that capital is participating is really interesting. So years ago, when Daniel and Laurent and I first started out in this sector, it was quite difficult to get these projects project financed. They were equity financed 19 years ago. It was only the European utilities that were really funding them. Renewables has come such a long way. It is now a very mature asset class, so much so that in Europe we saw the institutional investors, the pension funds, insurance companies investing at very, very low costs of capital because they really didn't see these assets as being risky assets. We're now starting to see those same institutional investors who, have a risk criteria to satisfy, looking to put their money outside of Europe into some of the markets that Daniel and Laurent are working in, which you might consider to be riskier markets, some of those markets in Southeast Asia. But they are getting backing from various credit agencies. So UK Export Finance, for example, is standing behind some of that debt that's going in from these institutional investors. That's a huge change, just seeing that. That's a big change. It means that renewables really has become a pretty standard investment. But at the other end of the scale, you've got the institutional investors investing in a whole host of different companies. And they are requiring those companies now to be sustainable. We don't have mandatory rules as such in terms of the investment criteria. They are, for example, in the UK and Europe, voluntary, but they're more or less being treated as mandatory. And so when I look at, we act for a number of the large oil companies who are very active in this space and delighted to be seeing what they're doing. But what I sometimes see some of their annual reports in terms of their predictions for investing in conventional fuels over the next 20, 30 years, because they're saying the demand will be there. I'm sure demand will be there. But if their shareholders aren't able to invest in them to enable them to access that, then they simply won't be able to do it. So I think there's this whole shift happening at a very senior level of how capital invests that is really going to dictate the speed with which some of this transformation that you first asked me about happened. And I'm sorry if I've gone slightly off piste.
No, that's good. But basically you're saying that the pressure from institutional shareholders, which is partly driven by consumers and environmental concerns, will accelerate the adoption, accelerate investment in and the adoption of renewable energy.
I think so, as well, Michael, because I don't know who's in the audience, and it's only really when you have private conversations, but most of the institutional investors will confirm, whether privately or publicly, that certain conventional fuels, the companies which are majoring in those, will become stranded assets over the next 10 to 12 years. So they know at some point they're going to have to start pulling out unless these companies can do things differently. And they're all watching each other to see who comes out first, because then you will see the domino effect. So I think people, it's not just a question of renewables being cheaper, there being economic and political drivers at a country level. It's also that the requirements of capital will demand that not just renewable energy companies, but other companies start shifting their sourcing of power and their traditional generation assets into renewables.
Interesting. Hongbin, do you see that conventional oil companies are going to increasingly come under pressure from shareholders, from institutional shareholders, and the term stranded assets is pretty powerful for some of these big, pretty powerful terms. Yeah, so it could become stranded assets.
Yes, I give you example. In the Huaneng group, Huaneng is the largest the power generating company in the world. Its company itself got installed capacity of 170 gigawatt. So Huaneng actually been forced, not okay, voluntarily or been forced to phase out the coal-fired power plants in the last 1.5 and 2 years. And replacing them with the gas-fired the power plants. And I had the one conversation a couple of years ago with the CEO of the Huaneng, and he said to me, I was quite surprised, and he said to me, say, Hongbin, I'm not going to, I cannot imagine 5 years after what the Huaneng is going to be, because so many pressures from the government and from the world and from the whole thing, even the corporate social responsibility things kicks in. Yeah, so I think developing the renewable energies at the moment is definitely a trend. And aside from the global warming and go greener and stuff, I think each country also has its own motivations. I mentioned the Huaneng in China, because Huaneng got the number of very big power plants around the Beijing. So it's one of the major generator supplying the electricity to Beijing, because of the air pollution around the Beijing. So the government said, no, we have to move to the cleaner, the energy quicker. But for the UAE, I think we saw the very rapid development of the solar energy at the moment, and the nuclear as well. And we got Hassan, the clean coal power plants under construction as well. So I think UAE's motivation, apart from the common reasons, one important reason is try to diversify the energy resources. We know until a couple of years, the UAE, the power, the electricity, 99% rely on the gas, which is coming from mainly from Qatar. And for Saudi, I think Saudi has another new sort of a motivation. And we all know in the past 10 years or 15 years, domestic consumption of the oil in Saudi and shot up very quickly. Now I think it's nearly 1/3 of Saudi's the oil output will be consumed domestically. So if the renewable energy can be brought online and then substitute the gas for the gas or oil for generating electricity. For Saudi government, that means every day you got probably 3 million barrel times $60 the cash.
Yeah. Laurent, I want to get to you, because that is one of the advantages potentially in the region, is that if there's more consumption domestically of renewable energy, there's more oil to export globally. Are you seeing that trend?
Yeah, definitely. We strongly, all countries in the region are different. Saudi has probably less gas and etc. But definitely developing renewable energy for the countries in the region, contrary to what people believe that these countries could be against renewable because it could kill their business. It's exactly the contrary here. We see a lot of interest because it gives them the opportunity to export gas, especially. To the rest of the world and to make more money out of it than just producing electricity they can do with renewable and at a cheaper cost today. So we definitely see the same trend. So UAE once again has been I would say probably in front of this being probably the more I would say a dynamic economy and etc. But we see the same now happening in Jordan, in Saudi, in Oman very soon. Yes, definitely. And coming back to the point about the financing, it's very interesting to see that when probably at the time with Daniel we were at Masdar and talking about financing the first big power plant in the region, which was Shams 1. At that time, a lot of people were afraid that we won't be able to do it, although the off-taker was the government of Abu Dhabi, the partners were 2 or 3 very large companies, and it happened 10 years ago, and now we have seen a lot. And we see exactly the same in distributed solar now. A lot of people, when we started this business 3 years ago, were telling us you will never find a bank to finance your business, and we have actually now banks and as Michel mentioned, we have a lot of private investors very enthusiastic to join because it's for them another opportunity to invest into energy in this region. Oil and gas has been the traditional way to invest into energy here. These people, a lot of investors, they want to diversify. Utility scale is an opportunity, but it's difficult. It's a very competitive market in here. Distributed is another distributed generation. Is definitely an alternative, and we see a lot of interest. And distributed generation, it opens as well the door. And coming back maybe on the previous panel about tech, it has a lot of potential development beyond purely producing solar from the roof. When you have installed a solar system on the roof of a client, you have access to his electric installation. So you can know how much he consumes. You can help him saving energy. So that's another. And then in the future, and very near future, as it's happening in Europe, you can start managing the demand to provide the utilities the possibility to reduce the demand when they need or when to increase the demand where it needs. So this will require a lot of technology, and here we are talking about blockchain. We are talking about massive amount of data to be managed, but that's another opportunity that comes with distributed, and that's very much what we want to do in the very near future in SirajPower.
Okay, thank you. Well, look, we're just about out of time, but one final question to you, Daniel. Talk about partnership models. What partnership models have you used in this region? What have you learned from them? And what would be your recommendations going forward?
Yeah, so on partnerships, what we like to follow what we call a country playbook. So we find countries that need renewable energy for the long term, and where the tension between the conventional power economy and the renewable energy power economy is not too strong, so we can develop renewable projects. And then usually we find a small plant that we can do easily. Mm-hmm. And usually in the process to do that, we find a local partner. And then as soon as we feel comfortable with the rules and regulations, and we have a local partner who makes us feel at home, then we move on, and then we buy as much. So in the case of Jordan, we actually, one of the main economic groups in the country wanted to become a shareholder in our company. So that happened. In the case of Egypt, we have several local partners. But as to how to look at it going forward, look, there is an example that I like very much, and because it's not in the region. And I saw British people are in the room. So there's a plant in the UK called Hinkley Point. Mm. It's a nuclear plant. It's a $30 billion thing. if it's built on time, which that technology, or on budget, which that technology has not yet been built
Yeah.
at less than a multiple of the budget, and it's a 3 gigawatt plant. So any of the solar professionals in the room will tell you that a solar plant in the UK can be built at less than 5 to 10% of that capex. But then maybe you will say, well, but you need storage. And say, yeah, if you want to buy the most expensive batteries that money can buy, you can probably go to 10 to 15% of the cost. But then I'll argue that saying that is extremely gullible, and that's not the way that we should go about renewables. So yes, we have a product that is cheaper, and yes, we have a product that catalyzes direct investment and education and all these good things, but we need to take a step back and understand that our industry, if we're lucky, will be $11 trillion by 2050. We have today an industry, which is the oil and gas industry, that has invested $77 trillion in conventional assets. So that's a lot of people's pensions. I had a minister of energy of a very prominent country tell me, Daniel, we have several 100,000 families whose income depends on these plants burning liquid fuels. So just for us to think that because we have a product that is cheaper and better, and because we are Captain Planet, so to speak, we're going to get work, that's not how it works. We have to find examples where we go away from the conventional power tensions, where perhaps we're providing new basic infrastructure to some of these countries, and try to grow in a sustainable way. And we should not be heartbroken again or disencouraged again, because sometimes the more we grow, the more trouble we will find. A lot of people will find it inconvenient, and you will be surprised how many people will find it inconvenient. And so that's my advice. Is the politics. Don't be dumb, right? It's not you, it's the politics. And so take a step back and try to go around, and let's try to be respectful about the whole process.
That's really interesting. Look, I'm afraid we have to leave it there. I'm conscious that we're way over time. We were due to have Simon Penny, the UK Trade Commissioner for the Middle East, Afghanistan and Pakistan, speak now. But he's been meeting with the Economy Minister, and that meeting has overrun, so he's not managed to make it. I can't imagine that Brexit would be on that in that discussion. That's probably what's taken so long. So we have to wrap it up now. I want to thank our panel, but I also want to thank you all very much for being here. Wonderful to be back in Dubai. Thank you very much for attending. Thanks for engaging with us, and we hope to see you soon. Let's wind up by thanking my speakers on the panel. Thank you very much indeed.